Thank you for joining me. Today's video is about the top 5 insurance coverages for trucking companies. This one, again, is very specific to trucking carriers, those who are operating under their own authority. So I'm going to jump right in. If you want a copy of this presentation, just feel free to reach out to me. I'll have my contact information available at the end. So, jumping right into number one, the only mandatory coverage, the only coverage that this is even predicated on is on the liability, auto liability. Just like your personal vehicle having personal compulsory insurance, you need to have some type of liability as a trucking motor carrier. So, this is the foundation of your policy. The minimum acceptable limits is going to depend on how your DLT is set up. If you are just intrastate, then it would be under the state minimums, which vary by state. However, if you're crossing any state lines, you will then be under the federal minimum, which is $750,000. This coverage, again, reports directly to FMCSA through a BMC 90, also known as a filing. So make sure as you're requesting insurance to ask for the filing to be done, either federal or state filing, so that your insurance company can notify the FMCSA of the policy's activation, which is what's needed in order to have the DOT activation. The second coverage, often used, but it is optional, is called physical damage. Physical damage covers the body of the truck, pretty much comp and collision. There's times where physical damage may be totally optional, such as the times where you own the vehicle yourself, so you can have the luxury of whether or not you want to cover the body of the truck. However, if you're planning to rent a vehicle, most times they will require that you have physical damage coverage, as well as if you're financing or leasing, that requirement by the lien holder, the loss payee, will be for physical damage coverage up to the amounts that they dictate. When you request physical damage coverage, you're going to also need to have a stated value. This stated value can be based on the loan amount, the common marketplace amount, but this value is directly linked to your premiums. So the higher the value that you have, the more expensive your coverage is. So don't undercut yourself, but at the same time, don't be over excited don't over evaluate the value of the truck. All of it still goes through a claims process at the time of need. So even if you say your truck is worth $100,000 and it's truly only worth 50, they're going to make adjustments accordingly. 3, general liability. This is a very confusing type of policy in regards to trucking carriers because it sounds so much like the basic auto liability. But general liability is not the same. It is a requirement for many of your larger brokers and shippers, but it's more of a general coverage. Every business can benefit from having a general liability policy. And more often, when someone is referring to you having business coverage, they're talking more so about your general liability. But let's look at some situations where truckers' general liability would provide that coverage for you. So if customers were to slip or fall on your premises, that's either your office or inside your truck while it's parked, that's when general liability would kick in. If you had an erroneous delivery of products that resulted in cost, which would always or most likely always be, if you delivered to the wrong place, that would be covered by your general liability policy. Actions of a driver while representing you on loading docks or anywhere else, if the driver was very abusive in their language, their tone, their mannerism, that can actually come back to you as their employer, but that would be covered under general liability insurance. Libel and slander on your part. And this is such a slippery slope because it's really kind of objective, But if another company says your advertisements, your marketing campaign, the way you do business actually makes other businesses look bad on purpose, you're going for them, they can sue you, and that would be covered under general liability. And then last but not least, most general liability policies also include a set amount, typically on a $1 million general liability policy. This amount is in the form of $100,000, but you will have protection for rental properties. So fire specifically on a rental property due to your error. So there is some property coverage included with general liability. But better yet, this acts as a separate pot of money, separate from your auto liability. So, should claims happen, should a lawsuit occur, you have a possible $1 million auto liability and a $1 million or $2 million general liability policy to work together to protect your company. Number 4 is cargo. Although cargo is not a requirement to activate your DOT authority, it, of course, is fundamentally what you are doing as a motor carrier. You are hauling goods. Now, there are situations where some people just have the company set up for, and I won't get into those various reasons, but there's some flexibility in that, in the way that it's structured, to where cargo insurance is not a requirement to be up and running as a active authority. But this policy is not reported to the FMCSA unless you're a household mover. So this is not reported. It doesn't have a filing because it's not a requirement. Your commodities should be as specific as possible, but can also be updated as you take loads. So if you take a load for a particular type, and as long as they're kind of in the same category, but you want to make sure you're covered, you'll call your insurance company, ask them to specifically put it on. And if you find yourself not taking advantage of those type of loads anymore, you can remove it. Many times it may fall under a category to which you're already being rated, and that change may not even really need to happen. Your typical limits of cargo insurance is around 100,000. This is what shippers and brokers are most interested in, because this is the coverage that shows you're protecting the items they entrust in your care. So they're really going to be looking at your cargo policy. And although the FMCSA website gives an idea of what you plan to haul, it is truly your cargo policy that gives you the authority to. Now, if you also are doing refrigerated loads, refrigerated breakdown coverage needs to be specifically asked for. It's not just thrown in because you have a reefer unit. Although an experienced agent will mention this, they're going to notice the type of equipment you have and make recommendations on the proper types of cargo coverage you would need to protect your loads. Last and not least is workers' compensation. Workers' compensation is not a coverage that's required, once again, to have a DOT authority. However, there are many states that have a requirement to have workers' comp, whether or not you have true employees. I'm in Texas, and in Texas, it is not a mandatory coverage. However, you still have the duty to notify any contractors, any employees, whether or not you carry this coverage. Workers' compensation coverage covers the medical expenses, lost wages, funeral expenses, ongoing care of anyone who is hurt, sick, or dies as a result of a work-related accident or illness. This is very particular coverage. A lot of times you'll be needing to pay quarterly, not necessarily on a monthly basis. And you're going to also have to complete a payroll audit. So pricing for workers' compensation is based on the payroll, which is the amount you pay out, as well as the role of your employees or contractors. It doesn't matter if you're paying them by W-2 or 1099. It's as long as they're contracted or working on behalf of your company for the purpose of workers' comp, you would classify them for coverage. You can also choose to include or exclude the owner. So if your company is owner operated and you don't have any other workers with you, you can choose to exclude the owner in order to save cost on the policy. Many people undertake purchasing a workers' compensation policy because it's a requirement for their contract. So saving costs, such as excluding the owner, can be to your benefit if this is really the true use for you having this policy. So there we have it. In short, our 5 different coverages needed on a policy. If you have any questions or concerns, feel free to reach out to me directly at lrmctrucking.com. You can go to the Meet With Us and you can schedule a time for us to do a full and free risk consultation. What we do at this time is we sit down and talk about your operational strategies as a trucking company and the impacts it would have to your bottom line as far as purchasing insurance, or even how these certain risks may impact your ability to hire or get other type of contracts. So feel free to reach out to us. We are here, we're available, and we're specialists in the trucking and transportation field. We're based in Texas, so we are very familiar with Texas laws and regulations, but we're also available in several other key states, including Louisiana, Georgia, the Carolinas, North and South Carolina, and Maryland. We look forward to talking to you soon. You have a blessed day.